Without further ado, let me introduce our first speaker for the morning, which is Dominique Cerutti, the CEO of Euronext NV and Chairman of the Managing Board.
Thank you, everybody. Welcome to Paris, great city. It's a privilege, a pleasure to be with you today, this morning, and to open this 2 days Trade Tech conference in Paris, and especially since it's said to be the year of a new chapter for Europe. So that's going to provide exciting challenges, but opportunities for all of us, I guess. Well, new chapter, new cycle, new rebound, new era. What are we talking about exactly? I'm going to share in the next few minutes what is our view at Euronext and my personal view. I do believe it's both a new cycle and a new era, and I'm going to try to share why. Usually we think or we say that modern capital markets were born in the 80s, and of course most of you remember, except the youngest, that at that time the development and the use of capital markets was mainly the most effective non-inflationist way to finance the economies. So financial market and economies started being connected. And what happened, as you of course know, development of liquidity through liberalization and more open market. That was a big bang that created the first financial center on the planet, meaning London. Of course, the computerization, connecting and providing information that was so important for efficient market and price formation, increase first internalization and then globalization, and significant development of asset classes like derivative products. That was the first era. It continued, as of course you remember, in the years 2000, just before and after. And if I net a long story and make it short, around those years until 2005, it was mainly a series of measures that have favored trading over listing and sacralize the price, the market price and the price discovery. It's also during this decade, around 2000, that the securitization was seen as a very efficient tool for the investor to diversify their risk and then participate in capital allocation and help the financing of the global economy. And it's also, to finish this step back, the years, so until 2000, 2005, that we have seen the end, but the full effect of the so-called efficient market theory on the market and the market structure. And last, it was, of course, the preparation for, in Europe, of MiFID I, inspired from everything I just said. And that was 3 decades of significant development. Most of the experts, of the analysts at that time, I was not there at that time, but most of the analysts were seeing all those developments, measure action and structuration of the capital markets as being quite good, with a very optimistic view and enabling economic growth. And for a big part, it has been the case. It has created decades, 3 decades of economic growth, no doubt. However, at the end of this period, we could see a kind of disconnect between the growth of global GDP and the growth of what we could call the total value of financial assets on the planet. Those financial assets grew 4 times faster over the 3 decades than the GDP. So we saw this disconnect. And what happened, I'm coming to the new era, 2007 and 8 put an end to this era, and change, I guess, forever what financial markets are. So you, of course, know this period of time. I'm not going to spend time. I will focus on what's ahead of us in our view and in my view. But simply put, if I, after a few years, snapshot what happened or the takeaway from the crisis in 2008 is, first, we finally understood that much of the rise of the global assets, as I said, financial assets, did not reflect capital being channeled to productive economic activity. It was not the case. We have to recognize that. Two, it ended in an accumulation of risk that was unbearable for the planet, and we of course know that. I'm not going to develop that. Three, and maybe more importantly, I have an engineer background initially. It created because of the dogma put in MiFID I, which was good for competition and innovation. However, the side effects were over-fragmentation, opacity, and complexity. The market structure finally, and it is my personal judgment when I try to snapshot, it created a market structure that could be described as a complex, non-linear system, which is for me one of the most concerning issues. Let me explain in 10 seconds. A complex system is a system where, so I'm talking about market structure as a whole, right? Complex system is a system where you put something in output, and under certain conditions you have no clue what's going to be the output. So you know what's in input. Non-linear means small changes can create significant effects and damages. So I'm not going to elaborate, but flash crash in May 10 in the US was that. And it's because the interconnection, coming from the fragmentation, the computerization that has been injected, and the interdependency and so on. So which is, of course, with everything I said, the risk has accumulated, the opacity, the disconnect between real economy and the financialization of the markets, and this complex nonlinear evolution, a big concern for everybody. So you know what happened, and after it took, I guess, 5 years. I'm French, so I'm traveling a lot, really a lot, but my headquarters are in France. And that's I'm saying that because it's a perfect reflection of what happened post-08 for 3-4 years until 12, 13, right? Which was finger pointing, bad financial market, taxes, trying to fix with a stupid regulation, excessive regulation like the FTT, say let's go fix that, and so on, bonus, everything you see. So 4 years of where folks could not digest in a wise, calm way what should be done to address that. And thank God, I'm moving to my point to introduce the session. Thank God, I believe that the new era, which would be the 21st century of financial market that started in 13 or 14, it is a new era. I believe that. Why do I say that? Which is quite optimistic view for a bunch of trends, which are usually a huge trend, here to stay, interrelated, combining and creating more than a new cycle. In what I see new cycle in several asset classes. I see a new era for the positioning of financial market and capital market. So the first item, or the first of those trends is of course the macroeconomics being better, recovery on the planet. Of course, more obvious in the US. Very likely in the UK, it's slower but certain apparently in Eurozone. So when macroeconomics are getting better, slow recovery, it's removing anxiety from the society, and again, the finger pointing has stopped. To Eurozone, since we're speaking about Europe and Eurozone, Eurozone should, with no doubt, emerge from this era as being more integrated financially, and especially if I take an example with the repairing of the banking sector, which is again providing more stability and more optimism. Three, and that's of course, you know that, the most important point versus the last 5 years, there is now a strong awareness, and I see that every day versus what I was saying in the years 2010, 2011, 2012, that financial markets are critical to finance the economy, and that without them, that will not be done. It is what we call the disintermediation of the financing of the economy. It has started big time. It's a slow move, of course, but it has started. It has started with a shift between bank loan to debt. The DCM market is now 36% of the loan volumes. It was 20% in 27. So you see that if it is a slow move, it is a significant move. And I see this repositioning and better awareness from policymakers, regulators, economic agents as being something very good, given everything that has been done on the capital market themselves to repair what was broken and again reposition the financial market. And underneath that, I will not enumerate all the trends because there are several, but you of course know that for Europe in particular, underneath what I just said, the great rotation has finally started. We were waiting that for the last 3 years. It has started big time. It's here to stay. We've seen more than 70 billion of capital coming from North America being reallocated from bonds to Euro stock in the last half of the year 2013. It is continuing. The companies and the SMEs in particular understand they need to access capital market and not only bank loans, otherwise that's not going to make it. And it is what we're seeing. We have never seen a pipe of IPO in Europe and on Euronext that has been that good for the last 6 years or 7 years. It's not only the number of companies, it's also the structure, big companies and SMEs, new news. The IPO that went through in the last 6-9 months were all a success. The oversubscription is a pleasure to see. Within this oversubscription, we're seeing the institutional investor coming back, but also the coming back of the retail, which was not expected that fast. So all that is a virtuous circle fueling and feeding the market with good volumes, a good pipe of IPO. And more importantly, if I summarize, an excellent repositioning of what financial and capital markets should be within the real economy, which was, by the way, the main takeaway of the crisis of 2008 with this disconnect. So I will stop here in this introduction. It is after years of crisis, tension, anxiety, finger pointing, exaggeration of quick fix on regulation, sometime needed, sometime kind of ludicrous. I see this new era with a new cycle as being very positive for capital markets in Europe in particular. I think it will be worldwide, but it is surely in Europe. I mean, again, capital markets playing their role closer to real economy, and that could be the beginning, and I trust, and I think it is the beginning of a new opportunity that's here to stay, and I hope that the next decade will confirm what I was telling you this morning. It's calling for changes in our case for this community. There are new challenges, new risks, and new opportunities, but directionally it's pointing in a to a very attractive era. So, optimistic introduction this morning. I wish you an excellent session here in Paris. Thank you so much for traveling and being with us this morning. And please enjoy your session. You are in very good hands. Daniel, if you want, you can take over.